all, if you kind of just want to share with everyone who you are and what type of business that you do.
Sure. So my name's Alan Moore. I am a financial advisor. I have been in this industry for 40 years, coming up next week, actually.
Nice.
And predominantly what our business focuses on is working with individuals, families, and small business owners to help them get a very solid understanding of where they are currently, help them to identify some goals and objectives for their future, and develop a strategy that would help them reach those goals and objectives. So there's a lot of areas that we discuss with our clients.
Yeah, absolutely. And for those who don't know, I know Alan because his son Spencer is one of my good friends. He's the drummer of the incredible band. Well, he was with Inferi, and now he's in Archspire, which is really cool. Very proud of him. The first show I played in Nashville, his band Axis played. And that night we became like best buds because neither one of us are like competitive people. We just like want to get better and we want to learn from other people. And then Alan and I met over the pandemic when I was selling insurance to try to stay alive because we couldn't play music and we couldn't cook in restaurants because I was a chef as well. So we talked a little bit, but some of the main things that I'm running into with working with artists is, luckily I got to have a pretty good amount of experience managing restaurants financially. I took purchasing and I took accounting and personal finance and all this kind of stuff. So I felt like I kind of understood it. And plus my dad was pretty smart with it. But the thing that I noticed is a lot of artists especially have this really weird, like they want to do things for cash and they want to like try to hide what they make because it's not even very much and they're not saving their receipts. Because my thing is like, if you treat it like a business, yes, you're getting paid, but you're also, whenever you invest in your business, those are tax deductible things. So my question for you is like, what is a good starting point for an average artist?
I think really at the time you get your first paying opportunity.
Yes.
If you're going to generate revenue through being a freelance musician or, as a part of a band that's operated like a business, you need to treat it that way. And
exactly,
even if it's, I think you create one of the best ways to maybe enhance your belief system in what you're doing or to legitimize it in your mind is to actually establish a business name. And maybe it's Greg Vance Percussion or anything that would create more of mind shift from, okay, it's just me out here and I'm playing gigs where I can get them, but like a business.
Exactly.
So that you can grow that business, create awareness about your business. And in the long run, a little bit of work on the front end will help you with taxes, with your financial future, just creating that structure so it's not, you got some money coming in here and you got some money coming in there to really legitimize it.
Yeah, thank you for that. So, and that's something that my dad kind of pounded into my head pretty young too. And so I have an LLC we have an LLC for our band. I have an LLC for my studio. I keep really good financial records, but it's like when I try to explain that to artists, sometimes they're just like, they kind of glaze over and they're like, I'm like, man, like I will literally give you, a spreadsheet that I use to track things. And then, I use Adobe Scan a lot of times for like when a business gives you a paper receipt, but now it's like, you just use your business email and you have it all go to one folder and you just update your spreadsheet. And then you can kind of see where you're at, but it also keeps you from like mixing in, I believe the term is commingling.
Right.
So, I try to really I'm not trying to scare people, but I'm saying like, hey, if you're not keeping track of this stuff and you were to get audited by the IRS, like you're going to be in a lot of trouble because they're going to have to make a lot of assumptions about how much money you made. And the IRS isn't like, they don't show up and like, hey, buddy, they show up and you can go to jail if you don't pay your taxes. It's federal offense, So
Right.
I'm trying to help create a culture where, I like to help people and stuff like that, but I'm not like a financial advisor. I've just watched a lot of financial advisors. I've spoken with a lot. And, like we had lunch a couple times in Nashville when I was there. And I try to pick people's brains about things like directions to go down. So one thing I would say is, the difference between like a sole proprietorship and an LLC, isn't really too much, right? Because if you're a sole proprietor of an LLC, you're essentially just adding a layer of protection in front of
That's
you.
right. The LLC, which is, it's classified as a limited liability company. That's what it'll see. So you do create some level of insulation from potential risks like lawsuits.
Yep.
The other thing is, and I don't want to overuse this terminology, but it does legitimize what you're doing.
Right.
Also, if you have an LLC, you want to run financial reports on that LLC and see what your profitability is. So are you doing things to maximize revenue? That could be marketing, that could be whether that's word of mouth or your networking or whatever it is to create opportunities for you to go perform.
100%.
You can demonstrate that you're running it like a business, and then those expenses that you have to do those types of things, whether it's, any social media advertising that might cost you, or if you're trying to promote, maybe you're providing drum lessons. If you're actively trying to market those opportunities, you're going to have some expense associated. You want to keep track of those expenses.
Yep.
And then, on a regular basis, maybe monthly, you track, okay, so I brought in X, I spent Y, so my profit is Z.
Right.
And then that's how you can base what your future tax liability is going to be on your revenue. And quarterly estimates is a simple way to be prepared for that April 15th tax filing deadline when you may now owe X amount of dollars.
Right.
If you do that quarterly and you can base it on your prior year, let's just use some hypothetical examples. Let's say that during the course of the year, you brought in $100,000, just to make math easy, and you had expenses that could include marketing, they could include equipment costs, if you rented studio time, all of those types of things, you can deduct that from that $100,000. And let's say that totaled up to $25,000, all your expenses during the course of the year. So now you've got a $75,000 actual taxable income before adjustments that the IRS allows. Well, you can easily calculate from a tax bracket what those taxes. I mean, there's published your tax brackets.
Yeah,
you can estimate what you owe in those tax on that $75,000 of income. Break it up quarterly, and every month be pushing money aside to reserve for that quarterly payment, and then you're not getting hammered with a big bill at the end of the year.
Yeah,
you're also able to track if you set some goals. I know what my living expenses are. I need to generate X amount of revenue in order to cover my cost of living.
Yes.
In order to pay my taxes, to invest in my business, to grow my business, but also to invest in my future, because one day you might want to retire. And so you'll need income at that point, and there's a lot of ways you can plan for that. So really, like creating that LLC and taking steps and using tools like whether it's an Excel spreadsheet or QuickBooks is a great work tool to use, and you can actually, depending on which version of that, you can really run all your financial operations off of QuickBooks, write checks, everything through it, and it automatically tracks it all. I mean, there's a number of tools out there like that. So
100%.
Yeah.
So I had a few people, I'd like ask some people ahead of time, like, hey, do you have any questions? I'm going to be interviewing a successful, essentially an asset manager. That's kind of what you would call yourself, right?
Right.
So one person, let me get this up here. So one person had asked, so if you're legitimizing your business by starting an LLC, but you're still working a normal full-time day job, if you end up not making more than you spend, they wrote it weird. If you end up making less money than you spent on that, what are the tax implications and how does that affect your normal W-2 employment?
Okay, so first of all, I will tell you that I'm not a CPA. However, I understand how these things work. So at the end of the day, it would be advisable for people to have a relationship with a tax professional. However, that question is a great question. So let's say that you are a W-2 employee, you've got a salary, and you're making $50,000 in that role, whatever it is. And then you create an LLC, and in the course of that process, you may have some startup expenses to get established, minimal, but to get it started. But then let's say you generate 10,000 revenue, but you actually spent 12,000 during the course of the year. So you had a $2,000 loss.
Right.
On when you will have a Schedule C when you file your taxes, and you'll be able to demonstrate that $2,000 loss that would then be effectively reducing the income you earned from your W-2 job, and thereby, quite honestly, saving your tax liability.
Yeah, I had said that to several people. Mm-hmm. I'm like, man, why are you working your job and then taking your taxed paycheck and then buying things for your business, because you are getting paid for gigs. It's just not a lot of money, but like you just bought a $1,200 guitar and you didn't save the receipt, and you bought it like with money that had already been taxed, and then you're paying sales tax. And then, it's like, if you're not tracking it, like,
exactly,
then you're just paying it out for no reason, because you can build. The reason I got this studio too is because like I can work on building it together with other people. We can all help each other out and keep track of everything and be a legitimate business. And that's the weird thing about the music industry is, there's a lot of still under the table deals that people take. And I'm like, hey man, like if you're playing at a venue and the person doesn't issue you a W-9 or a 1099, like no way of you being able to prove that you're being paid,
right?
Like you got to quit being scared of paying taxes, because honestly, like if you're already not good at managing your finances, if you take like, instead of watching an hour worth of whatever on the internet, and you took at least 10 minutes a day, just go, I'm going to like pay attention to like some financial seminars and things like that, and just watch people and watch interviews with people like that. Then you kind of learn things, because I'm kind of notoriously like, I'm kind of dumb, honestly, but at a pretty young age, my dad got me, looking at financial books and stuff like that. He was that was back when you get like little tapes. Right. So you have all these, like Rich Dad, Poor Dad, all these like books that he would listen to on his way to work and stuff. We'd ride together. He's like, man, I want you to start listening to some of this stuff. So I got Amazon Audible, and I still just regularly, as I'm working out or I'm taking a walk, I just listen. And after a while, at first it seems completely overwhelming, but after time and time again, you hear the same thing repeated, and you're like, okay, that actually doesn't sound as complicated as I thought at first.
Right, right.
And I feel like there's never been a time where there's been more accessible tools for people, like free tools. Like I do everything for my businesses. I just make my own spreadsheets, and then I like essentially I have a business bank account, I have a business credit card, everything's separate. So there's no like, because that just takes the whole point of having an LLC away when you commingle funds, right?
Right.
Like that, you lose your protection.
Exactly. One of the things that over my career, early on in my career, I hired and trained and developed other individuals in the financial advising career. And at the time, we were aligned with a big insurance company. And at the same time, they were really all self-employed independent contractors. But there are numerous examples of when one of those individuals would be making a call to establish an appointment with someone to go talk to them about their investments or their insurance or whatever it may have been. And they say, I'm with XYZ insurance company. And I would go to them, at the end of the day, the insurance company is not your boss.
Right.
You're your boss.
Yeah, you're paying your own taxes, bud. Yeah.
That's right. So create that business. I mean, you make a great point. Get a business checking account. Run all your business expenses through that. Deposit all that business income, revenue into that account. And early on, it might be more challenging to do this, but say, all right, out of X amount of revenue that I'm going to generate from my business, I'm going to send 20% of that home to live on, or 30% or 50%. The numbers will probably grow as your career develops.
Right.
But if, to that example earlier of the W-2 employee and then setting up this LLC, just say, all right, I'm going to set 20% away for taxes. I'm going to send 20% to live on, support my lifestyle, and then everything else is going to come out of my W-2 job.
Right.
So create silos, if you will, help you build your overall financial position. And then hopefully as you get better in your music career, you become less and less dependent on the W-2 job, and you're growing that. And then you're sending a lot bigger portion of that home for your lifestyle.
100%. Yeah. So kind of on that same topic. So like when we first moved here, because I know you remember when I lived in Nashville, Mike and I had that venue out in Murfreesboro,
right?
And it was like recording studio and, rehearsal rooms and things like that. Similar to what I'm doing here, but we don't have the music venue. That part was like way too stressful. But having everything separated on that gave me a crash course on it. Like I said, my dad taught me some, but he was definitely, I was born in a trailer in West Virginia. And then by the time I graduated high school, we had kind of a lower middle class, not lower, it's like middle class house. Mm-hmm. And I watched him do it. And I watched him listen to financial books. I watched him work really hard and try to manage his time wisely. So I feel like, a part of society doesn't have a dad like that. So to me, I think it's cool to just kind of point them in the right direction. So and like I said, this isn't advice, this is entertainment, but kind of sharing what I do and kind of running it through you as well. And we'll get to some more questions here in a little bit. So basically, when we moved here, we had Kelly's business. We opened that downtown, which is a string instrument repair shop. Mm-hmm. So she's inside of a music store downtown called Fine Tune Strings Repair. I was originally wanting to go straight in and do what I'm doing here when I first moved here, but that was more important. So we did that, and then I established a separate LLC for this. So there's not like a limit on the amount of businesses you can have. It just makes them a little more difficult to manage. As far as management tools go, like I said, I'm using spreadsheets and things like that. What is some of like the easiest ways that you've found as a financial manager to point to people and go, hey, just like start with this and then add to your knowledge, but start here.
Yeah. So you're asking me, just so I can clarify your question, are you asking me like what are some resources someone should use to learn more about running their business?
So yeah, so like the best like starting place, would it be a book? Would it be a certain YouTube channel? Would it be a certain, and we're talking, artists who aren't familiar with managing their finances at all.
Okay. Well, one thing I would say, and there's a story called The Common Denominator of Success. And it's not exactly specific to any industry, but it is a fairly quick read. It's been around since, I don't know, probably the 40s.
Oh, nice.
But it talks about the one thing that successful people do that others who are not successful don't do. And they do those things over and over and over again, no matter how mundane they may be. In your profession, in the music world, practice is something obviously that you have to do over and over and over again, right? To get better at what you do. So, and I think if you can tie those types of activities to the legitimacy of your business, it'll give you more of a why you're doing it. I mean, obviously every young person at some point thinks, boy, it'd be cool to be a musician, right? I mean, that's but not everybody is. And the reason they aren't is because it's not easy. Yeah. And you got to do things over and over and over again to get good at it. So the common denominator of success is being willing to do the things that unsuccessful people are unwilling to do, and you got to keep doing them. So that's 100%. More philosophy and motivation, but it's a good read. Yeah. And I think, quite honestly, there are a number of reads or things that you can listen to that I'll just say they ingest good ideas and good beliefs into your life. So seek out those types of resources that provide you guidance, direction, and whether that's specific to financial matters or it's specific to being a better person or being more successful in what you're doing, whatever you're doing. Right. Having good information going in helps you put out good product, for lack of a better
100%.
Right?
Yeah.
As far as Think and Grow Rich is a great.
Yeah, I've read that one.
Yeah. I mean, there's so many out there.
One question I have for you is one of the things I like to ask people who are in the type of business that you're in is, do you feel like it's like Dave Ramsey and Robert Kiyosaki over here, like completely separate, or do both of them kind of have good ideas?
No, that's a good question. I think that no one has cornered the market on good ideas. Right. So I think being able to develop your own perspective from different resources is really helpful. Yeah. Dave Ramsey has been a help to a lot of people, but everybody's situation is also unique. Right. And Dave Ramsey is more of a mass marketer, right? I mean, that's really what he does. And so not everybody's situation fits exactly what Dave Ramsey professes.
Yeah, I think Dave Ramsey is like really good for people that have no like interest in finance. And I think Robert Kiyosaki is for people who are like really into finance and are like, oh, like it's like, I don't know, people like call them loopholes and stuff like that. And I'm like, well, so here's the thing. It's not loopholes because it's like a weird phrase that it gets thrown around a lot, especially when it comes to politics. And what I say is like closing loopholes for billionaires is closing loopholes for small businesses. Correct? The whole like reinvesting in your business is like significantly lowers the amount of taxes you have to pay. So essentially what they're doing is their businesses are essentially everything, and their personal amount of money they have, like a lot of those people would be like kind of poor on paper because it's the assets that they own, but they're not like receiving their own paychecks that often. They're typically getting loans, acquisitions, and things like that. They got money coming in, and then it's like, Jeff Bezos is like, now I'm going to buy jets. I got money. Okay, jets, got infrastructure. So it's not like these guys are like sitting on like a mountain of money. They're just taking advantage of the system that we have in place.
Well, yeah, I mean, I give you an example. Think about if you own a home, you and the bank own a home. You have a mortgage, right? So if you can, and at the same time, you do have some capital on the side. Does it make more sense to use that capital, lump sum of capital, not your cash flow, but lump sum of capital? Does it make more sense to pay down that mortgage than it does to have that capital working for you?
Right.
It depends. If you have an interest rate on your mortgage at 3%, which aren't out there right now,
right? They
were. Does it make more sense to take an asset that you might be getting 8, 9, 10, 12, 20% of a return on, take that asset and pay down your mortgage? It's called arbitrage. And let's just say that asset was earning 10%, your mortgage is 3%. If you pay down that mortgage at 3%, you lost that 7% swing, right? The 10 minus the 3. So from a financial advice perspective, I would tell you, just pay that mortgage like you have every month and let this other asset keep growing that 10% because you're making the spread on it.
Right.
So to your point, assets can be anything. It can be money, it can be stocks, bonds, it can be real estate, it can be in your example, Jeff Bezos, it could be jets. I mean, but he uses those jets as a way to generate more revenue and thereby grow his other assets. So it's
100%.
And so having a plan and that's really what we do. Our team helps clients develop a financial plan on how to maximize their income, minimize their expense loads, take advantage of opportunities that the current tax laws provide.
Yeah.
They're there. So take advantage.
And there's some new ones now.
Yeah.
Yeah. I was looking over that bill the other day. One quick question I do have for you. I don't want to talk your leg off. I could literally talk to you all day. But I want to be considerate of your time. Is there something that you need to get to anytime soon?
No, I'm good for a little bit.
Okay, cool. I just want to double check with you because I have a habit of just hyper fixating on in conversations I have. It's called ADHD, but but I love it, man, especially if I'm into something. So I did have someone else submit a question to me. This person did not mind me saying their name, so Mike. So Mike is wondering about So essentially what he's wondering about is trading. But the question he has is if if you're investing a portion of every paycheck into ETFs that are more safe, does investing in those ETAs or ETFs, sorry, my eyes are being, does investing in those ETFs count as an expense when it comes to tax season?
So
that was handwritten. He took a picture of it.
Okay. Yeah. So it depends. One of the ways that you can, so an ETF is basically just a basket of investments, kind of like a mutual fund. Also.
Yeah, I have several that I invest in pretty heavily.
Okay. ETFs are a little more tax favored than a mutual fund, but that's another story. But from the perspective of an expense, let's say that you're investing $500 a month into an investment account, regardless of what it's buying. It could be ETFs, mutual funds, individual stocks, whatever it might be.
Right.
You can do that in two ways. You can do that as what would be called a taxable account, which means it's growing. You pay taxes on the income you earn to put that $500 in the account. So it's an after-tax investment.
So versus like a Roth IRA.
Yeah, which I'm going to circle back around to.
Yeah.
But so you can have a taxable account that is going to fluctuate with market performance. Mm-hmm. If you have gains, you could have a capital gains tax liability on that, but that money is accessible to you without any penalty or any age requirement to access. And the tax treatment is different. It's capital gains versus ordinary.
Yeah.
Than what a capital gains tax. And
right.
In 2026, if you make less than roughly, it's like $98,900 in 2026. If you have capital gains, your capital gains tax rate is 0. If you make more than $98,900, it's 15%.
Right.
So that's one way to invest, and that would not be a deduction to your LLC because that's just a personal investment.
Correct. Yeah.
If you set up an IRA or a SEP, a simplified employee pension, or a simple 401k, which is or solo 401k, then if it's pre-tax dollars that are going in that account, if you made $50,000 and you put $10,000 in that SEP, your taxable income for the year is $40,000. So in essence, you do deduct that $10,000 contribution to that investment account. That would be classified as a qualified account, meaning you didn't pay taxes on it going in. It's going to grow tax deferred. You can't access it without a penalty or taxes until you're 59 and a half.
Right.
But you don't pay current taxes on it.
Yeah.
You can do the same thing with a Roth IRA. However, you don't get the current deduction on that. That's with after-tax dollars, like my first example. So if you made $50,000 and you put $10,000 in a Roth, or the limit is, I guess it's $8,000 for this year. You can't deduct that $8,000, but that $8,000 grows tax deferred. And then when you're 59 and a half, you can take those dollars out and not pay any type of tax on it.
Yeah.
So there's 3 ways really to invest with dollars that you receive, whether that's proceeds in from your business.
Yeah.
or your income, depending on whether or not your employer has a retirement plan that you're able to participate in or not. So
Right. So I really appreciate that example too, because that's something that I've ran into as well. And it's like, investing as your business is like different than like trading stocks under your own personal like social security number. Like that's going to be a personal investment and that cannot be taken out of your business account. Now, if you want your business to invest in certain things, that's a different process.
well, let's just say that you've got your W-2 income over here and you're living fine on that, but then you want to fund an IRA, whether it's a Roth or a traditional IRA. You don't have a retirement plan through your employer, but you're making money in your LLC. But you want to invest in a taxable account, not tied to a retirement account in any way. If you take money out of your LLC, it basically would just be part of your then taxable income as a draw against your revenue. So it goes back, it's just on your Schedule C when you file your taxes, that $10,000 would be part of your personal income because you couldn't deduct that. That's just
right.
That's just taxable income to you.
Yes.
Right.
Yes. Yeah, because I had some people that I'd been talking to about finances as a musician, and that was like a part of that was like seemed very confusing. And it's still like I don't feel like I'm the most educated on that particular area where it's like basically they kind of update the list of like what is a qualified deduction. So it's kind of like you really need to make your decisions based on what's invest in for your business for what's current. Because I think sometimes people don't pay attention to stuff because there's like certain limits for certain types of deductions for your business, correct?
Yeah. So there's what's called Section 179 equipment or expenses. And Section 179, let's say that you had a large expense or you had a large need for your business, and many times big capital expenditures for companies are not always 100% deductible in the year in which you incur that expense. So you may be looking at depreciation over a number of years for tax treatment. But Section 179 equipment are things that you can buy. It could be guitars, it could be drums, and there are limits to the annual amount that you can qualify or claim as 179 expenses, but you are able to deduct that 100% off that current year's income. So if you go out and you buy a new drum kit for $5,000, that would classify as 179 expense, and you could write that whole piece off.
Right.
Thereby, if you made $50,000 in your LLC, but you spent $5,000 on the drum kit, assuming you had no other business expenses, now you're only paying taxes on $45,000.
Right.
So there's certainly ways, and again, a tax professional will give you more specific guidance, but conceptually, that's how those types of things work.
Correct. Yeah, that's great. Yeah, there's just so many things that go around that I think people, they just get like too overwhelmed with it. And it's like, man, it's not like you don't really have a choice. Like your social security number, that's like the way that the government tracks you. And like with everything going digital, especially with like AI, like you cannot be getting paid like thousands of dollars in your Venmo account and not reporting it.
Right. Yep.
Because it's tracked there. Like they have to report what type of transactions that they did.
Yeah.
And, up until now, the IRS and a lot of the government institutions are kind of known for having like really old dated equipment, and like all this kind of stuff. But like the push to AI is, you don't have to have a person physically sitting at a desk using Windows 95 trying to,
Right.
you got an AI bot that just goes in and goes, give me a basic audit on this person. Like, where's their money going?
Right.
And then it's like, well, they only claim this much, but they shopped here, they bought this, like, cause you got your name on everything.
Yeah.
So I'm not, like I said, I'm not trying to scare people, but I just feel like it's not the time to not be paying attention to your finances.
I mean, it's always important to pay attention to your finances.
Right.
And you made a good point, Greg, when you brought up Social Security number. None of us know really what the future of the whole Social Security program will be.
Mm-hmm.
What I can tell you, there'll be some form of a program.
Right.
It won't look like what it is today, but it'll be based on the income that you report.
Right.
So when you file your tax return, a portion of, let's go back to that example of the W-2 employee who also has an LLC. So the W-2 employee is having, that individual's employer is paying half of their Social Security tax, and that individual is paying the other half. But when you have an LLC, you're self-employed, you pay both sides of that. You pay 15.3% in Social Security and Medicare tax combined.
Right.
If you're not reporting and paying on that, when it is time to claim Social Security benefits, you're not going to have an accurate reflection of what you paid into the system. So you're not going to be, your Social Security benefit is going to be reduced well below what it could have been.
Right.
And handling it correctly along the way.
100%.
Yeah.
And there's also, so when it comes to Social Security and things like that, there's certain rules where it's like you have, like, I think it was like 20 years that you have been paid into it, and then it has to be at a certain point
10
before.
quarters.
10 quarters.
Yeah. So I mean, virtually everyone can. I'm sorry, it's 40 quarters.
40 quarters.
Everyone. So that's 10 years of employment. But
Yeah.
they look at your last 35 years.
Yeah.
To the part of the calculation. And then, there's a lot of strategy about when to claim Social Security and the kind of impact it has. Currently, what's classified as full retirement age is age 67.
Right.
I will be in December.
Yeah.
But probably little, if any of your audiences, this would be the applicable for right now. But long term, if you're reporting and paying correctly, it can be a very meaningful benefit.
Right.
To you. And at some point in time, while we're young and growing a career, we all seem to believe we're invincible and nothing's going to happen and I can always take care of myself. Well, that's not real world.
Right.
Things change and things happen. And so be planning for those future days, because there will come a time when you either can't physically, mentally, or emotionally be able to generate an income.
Right.
So you got to provide for yourself. And one way to do that is to be making sure you're contributing to Social Security so that there'll be a benefit for you there.
Yes.
One other thing that I think is really important for freelance musicians is to, when you keep track of expenses, find a system to do that. And if you travel at all, you have the opportunity to leverage the cost of that travel as it relates to, if you're driving from Nashville to Knoxville, Tennessee to play a gig, well,
Track those miles, baby.
Miles.
Yeah.
And there's a great app called Mile IQ.
Yeah.
That will track it all right on your phone.
Mm-hmm.
And you run a monthly report, and then when you file your taxes, you have the totals, and that's an expense that is absolutely valid, and you're going to incur it if you travel, to perform.
Right.
So not only is it equipment, but it's even some subscriptions that you may have that you utilize for, royalty-free music.
Yeah.
All types of expenses you incur, you got to keep good records of those.
Yeah, I do a lot of that with especially my teaching. So I have, programs where I can webcast sheet music onto a TV, and it's ad free and all this kind of stuff. So I can actually use it for education. And it kind of surprised me when I first started working with this music school here in town called Freeway Music, that a lot of the teachers were like, I had to pay $10,000 in taxes. And I'm like, are you not tracking your expenses at all?
Right.
And they're like, well, what do you mean? I'm like, they're not paying your taxes for you, your 1099.
Right.
So man, if you're using Spotify, you're a music teacher, you're a musician, that counts.
Yeah.
If you're using YouTube Premium, so there's no ads because you're teaching children based on certain exercises or something like that. All that stuff can reduce your taxable income, because you don't want to be paying taxes on things that you don't have to pay taxes on.
Exactly.
Yeah. So that's why I'm trying to do this thing. So the studio we have here, got in-house photography, recording studio, podcast area, green screen. We're doing booking for a lot of artists right now.
Right.
And a part of what I'm trying to do, I'm calling it the Dream Team, it's like a kind of a paid subscription monthly. But what I'm trying to do is get as much educational material for everyone to kind of at least get some conversations going. Because like I said, I'm not a financial advisor and I'm not giving people advice. This is entertainment. But having resources, because YouTube used to be really easy to find stuff on. Now it's if you're looking for one particular thing, you look it up. It's 10 minutes of hey, I'm blah, blah, blah. It's brought to you by Meal Hub and, all this kind of stuff.
Right,
and it's let's get some questions early, and let's kind of clarify some things with people that do this. It's we get gigs. People pay us to play gigs because they can't do it themselves.
Right.
And we're the experts. So why would you be freelancing your finances? Listen to the experts, listen to the people that have licenses, listen to the people that run successful businesses. Be a student anytime, especially if you're doing anything with self-employment, because you can literally ruin your life, not paying your taxes, getting audited and things like that. And then I'm trying to remember, I had one other bigger thing that I wanted to ask you about too. Let's see here.
Well, one thing I might throw in is if an individual makes a decision to form an LLC, there's a couple of steps that they need to go through to actually do that correctly. Mm-hmm. One is you can check in your state. You need to come up with a name. It doesn't have to be a marketing name. It doesn't have to, if it's not anything that you're ever going to market. Yeah, it can be Greg's LLC. Right. It can be as simple as that. Or if you have some brand that you're wanting to develop to market all your services, be creative, but you need to check with your state to see if it's available. Right. And you can just go on in Tennessee, it's tn.gov, and you can search to see what's available. Yeah. Once you get that, the state's going to say, all right, well, who's your registered agent? Well, that's for the LLC, and the LLC, if it's just you as a sole member LLC, well, you'd be your own registered agent, and that's where all the correspondence is going to come from the state to you, to anything you need to file with the state, or if you have in Tennessee, you have an annual report. If you have an LLC, you have to file an annual report. But so you need that. Typically, if you have, ideally, you would also want to have articles of organization that basically say, this is who's responsible for what. If it's just you, well, then you're responsible for everything,
right?
Which is managing the finances, paying the taxes, filing any licenses that you have to possess, all of that. Then once you do that, you apply for it's a tax ID number, like a social security number, but the LLC,
EIN number.
EIN number, right. So you still have your personal social security number, but your LLC is an entity and it would have its own tax ID number. For all practical purposes, an LLC is a pass-through, which means the LLC may receive this amount of revenue, paid out this amount of expenses, and has this profit.
Right.
That profit then gets shifted to your Schedule C, and you, under your Social Security number, are responsible to pay the taxes on that. It can be paid out of the LLC, but it's tied to your Social Security number.
Right.
And then obviously you got to have a bank account and all of those things. So it's there's a few steps, but it's minimal, and you can Google establishing an LLC and whatever state you're in, and walk you right through it.
Yeah, my dad bought me a book when I was younger, and I was like, all right, he made a deal that if I went and I actually finished college, that he would get off my back about it. You know what I mean? So I got my culinary degree. I was, working in a bunch of places, but that was because of one guy. My friend Sean had this really cool uncle that was the executive chef of a Carnival cruise line, but he was also a musician. And I was like, so what do you do? And he's like, I'm an executive chef of this Carnival cruise line. So I'm like out for like 3 months, back 3 months, out for 3 months. And I was like, cool. So what do you do like when you're not? And he's like, well, first of all, I make a salary. So whether on the 3 months that I'm off, he's like, my band goes down to New Orleans and we just gig the whole time. And I was like, whoa, wait a second. So one of the things I like to tell people, especially the young people, because I'm teaching a lot of younger students, and it's like, don't think that you have to do I have to go do this career that I hate, and then I'm going to have to quit music eventually. Because to me, it's like, you can find ways to work with it. Because that's what he said. I was like, I don't really know exactly what I want to do. And he's like, well, man, if you're wanting to tour and stuff like that, then I'd probably recommend becoming a chef, because have you ever been to a restaurant that doesn't have a now hiring sign? He's like, the whole world could burn down and all the books could be burned, but they're still going to need cooks. And I was like, hey, that's cool. And he's like, yeah. So in the earlier days before I got the Carnival gig, he's like, I'd work really hard, become the executive chef. And then if I got a really good tour offer, which is usually 2 or 3 months ahead of time, I'd go, hey, I got this really cool tour offer, really want to do it, but I want to make y'all aware of it. So will I have a job when I get back? And he's like, most places would let me come back because I worked really hard, but the ones that didn't, he's like, there's literally 250 places here that are dying to have someone make the food,
Right.
So it's kind of just being thoughtful about your career choice. You don't want to jump into something because you think you're going to make a ton of money that takes forever to get through. If you already know you're going to be miserable doing that, find something that gets you enough money to make ends meet, but then try to just start growing your music career on the side. That's what I did for years. I was just like, I'm going to, get a little bit here, but I'm still working here. And then I'm going to just kind of, back and forth a little bit. And now it's kind of amalgamated, but I'm, 36 years old now, it took a while.
Right. Sure.
So the other question that I had for you, so a lot of people were like, I don't have any credit. They're scared to get credit. And then I tell them about what my dad told me to do was get a secured credit card to start building credit. Which is basically you give them a deposit and they give you a balance and you kind of use it to get gas and pay it off. It's not it's not your money to just spend. You need to make sure that money's coming in, or else you're going to ruin your credit. Do you think now, because that was when I was 17, he told me to do that. So about 20 years ago, is that still probably the best method for people to start building credit if they don't have credit?
That's certainly one way. I mean, you can build credit by if obviously if you had a car note, pay those things on time, build that credit. We've seen clients over the years that were wanting their kids to develop a credit history, so they may have their kid go to the bank where they bank and apply for a personal loan for $3,000 and just make that payment.
Right.
Another thing is with a credit card. A secured credit card is one way to do it. But I think you can, depending on what your financial situation is, you can probably obtain a credit card these days without it being secured, where you have to put up money to get the card.
Right.
But that is where you absolutely want to pay off your balance each and every month. Use a credit card as a tool,
right,
not as a debt instrument. Because if we go back to that example I gave earlier about a mortgage with a 3% interest rate or investment that could get you a 10%. Well, if you read the details of a credit card, the interest rates on those are anywhere from 15 to 28%.
Yeah. And they get you with that. Yeah. It's 0% for the first 18 months. And like, they don't tell you that if you don't have that thing paid off by month 18, that you're going to get charged for all of that. And that's how people get absolutely buried. So that's why I tell people, I'm like, if you're going to do a credit card, I would do secure credit card first. And like I got a van loan. I think when I turned 18, I wanted to get a van to go on tour. And then, so I had been paying my secured credit card, or, every time I got gas, and I just paid it off. So then I had enough to actually get the van note, and then I paid that on time. You know what I mean? And then, so it's like putting that finance part first and not going like, well, I just don't have time to do it. And it's like, you have to make time. Like you have to make time.
Absolutely.
It's not an option. Because like people think they're going to get signed and they're going to have people doing it for them. And it's like the people that do it for you are dirty. You know what I mean? Like I don't know. It's like not a big secret that most music business managers and agents and stuff are, doing some shady stuff. So if I don't trust someone, I don't want them managing my finances.
Right.
You know what I mean? At least have someone that's like local to you, that you know who they are. You know what I mean?
Sure.
Take a look at your stuff and be honest with you and be able to be vulnerable and stuff, but don't fall into a lot of the traps.
Yeah.
Are you seeing any type of, like, with the people you're working with now? Like, is it still credit cards, or is there other types of things that people need to be watching out for that are kind of becoming newer with technology?
Well, I mean, there are so many attempts to scam through cybersecurity and all that. I mean, you just got to be extremely
cryptocurrency.
Don't be sharing personal identifiable information with organizations that you have no relationship with.
Right.
I might jump back to the credit card deal. I mentioned earlier, use a credit card as a tool with the intent to pay it off each and every month. Don't carry that balance, because you're going to get clobbered on the interest costs. And if you don't pay it off a couple of months, it just snowballs and gets worse and worse and worse.
Yeah.
Then you're digging yourself out of a deep hole.
Yeah, an absolute crater.
Yeah, and
because, like you said,
think about this: if you have some money, and you've got it at the bank, and you're getting, we'll just say, 2% interest on a money market account, and you've got a credit card that's charging you 20% interest. The reverse of what I was talking about earlier: pay that credit card off out of that money market that's earning 2%, because if they're charging you 20, that's an 18% swing that's going to the credit card company, and you're only getting 2. So it's kind of reverse arbitrage from what we were talking about earlier. There's also, I'd say, if some deal that comes your way sounds too good to be true, usually is.
Yep. Like, hey, send me like $200 in crypto so I know it's your wallet, and then I'll send you back $2,000.
Right.
It's like, hey, dude, same thing as those people that hold up the line at 8 a.m. at the gas station buying scratch-off tickets. Like, you're getting taken for a ride. And it's like, that's the literal textbook definition of insanity, is doing something that you shouldn't do, but you're just doing it over and over and over in an endless cycle. It's like that Ouroboros, like that snake just consistently eating its tail.
Right.
And it's like, until you break that cycle and get real with yourself, you're going to come up with all these excuses, but that doesn't do anything whenever you're standing in front of a judge, Like,
yeah, that's right.
And I always tell people too, it's like, if you're not taking advantage of your like expenses and things like that, that's not like something that you're into, or you might glaze over when people start talking about finances. But look at it this way. One of my friends said this to me one time, and he's like, so, just tracking your expenses saves you $5,000. Look at it as if I'm going to get paid $5,000 to learn this.
Yeah, absolutely.
Because it's going to cost you. So think of it as more of an investment in yourself, because at first it's a lot of time that you don't see things. But after a while, you start noticing, you're like, man, I've been doing a lot of stupid stuff with my finances. Like I said, buying a drum set with money that I got from my W-2 job, and getting paid cash and never claiming. And, of course, at the time, I wasn't even making enough to claim. But, just... that's essentially you compensating yourself. So think of it as your second or third job, is to sit down with your spreadsheet and just go through your bank statements. You used to have to balance a checkbook. Like, it's so much easier now,
Right.
Send the receipts to your email, use your camera, because it's not, if I'm not mistaken, the IRS says it doesn't have to be a physical paper copy. Like, it can be a digital copy. Yeah. So don't feel like you have to have a box of receipts. Just take a picture of it, send it to your business email, and then put them into folders. This is, food. This is business meeting. This is supplies. This is, I have like government, taxes, like all this different stuff. And I make like the way that I organize it is, I'll say like the budget code. I have a budget code on my spreadsheet that I made, where it's like, it's this, sector or whatever. Here's like the store. Here's the date. It's like separated in underscores. Mm-hmm. And then when you open the email, the receipt's attached to it. So then all I got to do is pop up my email, and I'll see like the number, and I'm like, move to government, move to supplies. And then if you do that a couple times a week, and then I do once a month where I really sit down and really go through everything.
Yep.
And it takes like an hour.
Yeah.
Because everything's there.
You're doing 5 to 10 minutes a week.
Right.
And then at the end of the month, just looking over, making sure it's all done correctly, and it'll make your life much easier if you do it along the way than waiting until April 14th.
Yeah.
The day before your taxes.
Reminder. Do it before that.
Yeah. So.
Yeah, man. Is there anything else that you would like to just kind of offer as sage advice for creatives?
Well, I think one of the things that creatives probably struggle with a little bit is what we refer to in our company as the B word, and that's budget.
Yeah.
We try not to use the B word. We call it a spending plan, because a budget seems like punishment.
Right.
But a spending plan can be logical and intentional to where you say, all right, I have X amount coming in. I know that my rent or my mortgage is X. I know my utility bills typically run in this range. So you can get a game plan. You have this amount of income coming in. You know what has to go out. What do you do with what's left over?
Right.
And out of that leftover amount, you say, all right, I'm going to allocate some for my tax liability. I'm going to allocate some for my future self by investing, saving, and I'm going to allocate some for entertainment and just general lifestyle, not expenses. And if you can spend a little time with that, your financial future will be much brighter than just waking up one day and don't have an opportunity to go out and earn a living anymore. So what are you going to rely on? So
exactly.
It's just taking a little time along the way to do those things and having an idea of what it costs you to live.
Right.
Right. So
man.
I would encourage everyone to develop a spending plan.
Yeah, absolutely, man. That's awesome. And then do you just work with people in Nashville, or can people work with you from longer distances?
We have clients, I think it's in 32 states. So,
oh, nice.
Yeah. So we have a lot of virtual meetings with clients that are, in other states, other cities than Nashville. The majority of our clients are here in Middle Tennessee, but we do have clients all over the country.
Yeah, that's great. And then what is the business called again?
So the business is Beyond Asset Management.
Yep.
Our website is www.gobeyondam.com. And, if somebody has a question, they're welcome to contact us. You can access us from the website.
Yeah.
Or my email address is alan@gobeyondam.com.
Awesome.
So, yeah.
Yeah, man, I really appreciate your time. I know when we met back when I still lived in Nashville, I was like, man, Spencer, your dad is so cool. And he's like, he knows, like, it's my dad's fault. He's the one that got me into that stuff. But it's like, man, I love having conversations with people that you can just ask questions to. And it's not, they're not spinning something for you. So like when I would ask you questions, you just kind of would be able to recall it because that's what you do every day, Right. It's like if you asked me to play Billie Jean by Michael Jackson on the drums, I could wake up from a dead sleep and just sit there and play it, Well,
I wouldn't have a clue. So,
right. And the whole principle of the business here is I call it a dreamscape co-op because, it's a dreamscape, but the co-op is like working together with people. Right. Not trying to overstretch yourself to where you get completely burnt out and you feel like you have to quit doing your thing. And it's like, no, man, like if you only have time to do photography, one day a week, but you don't have a studio, come in here, $25 an hour. Our in-house photographer will work with you and and stuff like that. And then we have the recording, we have the podcast, we have the content thing. So it's like, hey, it's affordable this way. Right. Everyone can work together. And with podcasts like this, where we can at least like kind of learn some things and you can turn some people on to resources they could get into, then I think it's not going to be overnight, but a stretch of time, you get the exposure. Sure. And then you start being able to kind of like, oh, okay, I know what that means. And I can actually answer questions now. So, sure. You're my first asset manager. I'm going to meet with another one that I grew up around in my hometown. But are there any other resources you would recommend for financial education?
Well, one thing, yes, there are. What I might do, Greg, is just send you a list of some that would be good for you to look at or to provide to your audience.
Yeah.
But one thing I might take just a couple of minutes, because sometimes when people think about investing, they don't have a real good understanding of maybe how it works.
Right.
And a real simple understanding is to think about, how do you invest? Well, there are really it boils down to there's only two ways to invest. You can either own or you can loan.
Right.
So when you walk into a bank and you open up a checking account or a savings account or a money market account or whatever, and you put $1,000 in that account, they're going to offer you some nominal interest rate for having your money there.
Right.
But what they do is then they take your money and they turn around and they lend that money to someone else to buy a car or for their company or whatever it might be. And they're going to charge them over and above whatever it is that they're paying you. And that's how they make their money. So
right.
When you open up a bank account, you lent money to that bank because then they're turning around and using it for their purposes. That is how a bond works.
Yeah.
So if you buy a bond, you've lent money to either a municipality, a government of some sort. It could be a government bond, or it could be a commercial bond, a corporate bond, and you lent money to a company.
Right.
And that bond says, all right, Greg, you gave us $1,000. We promised to pay you 3% on that, and it comes due in 10 years. So over those 10 years, we're going to pay you that 3% interest. And at the end of 10 years, we're going to give you your $1,000 back. So you lent them that $1,000 for them to use however they needed to use it, to build a road or to grow their company or whatever it might be.
Yeah.
That's the loan concept of investing. The other concept of investing is own.
Yeah.
It's loan or own. So if you buy stock in a company, you are owning part of that company.
Right.
Be a little more risky than a bond.
Yep.
But because of the more risk you take on, the reward is likely going to be greater than a 3% return that the bond was offering you. So
100%.
You share in the success of that company. And if you buy 10 shares of stock in an XYZ company for $100 a share, that $1,000, you may get a dividend off of it every quarter. The company may be more of a growth-oriented company, and that share price goes from $100 to $120 or $130, and 5 years down the road, it's at $150. So now your $1,000 investment is worth $1,500. So
right.
You paid $500 in that example. You get your money plus your earnings. So when you think about investing, there's really just two ways to do it.
Yeah.
You either loan or you own.
Yeah.
So
I do a lot of dividend investing with ETFs. I kind of do a lot of dividend companies, and I have drip turned on, so like it just automatically reinvest it.
Yeah.
So that's obviously really good to do. At least that's my impression, is if you have a Roth IRA. But like you were saying, one of the new laws is like if you don't make $100,000, you're not even going to get hit with capital gains.
Right.
But so what would probably happen though is if the law changed, then you could still only really contribute like a certain percentage to like a Roth. So it's probably a good idea to do a Roth either way, would you say? I think have like some stuff that's not in a Roth.
I think a great example is being able to, like, if you have a W-2 job, and the company offers a retirement plan, typically they're going to have a pre-tax and a post-tax, meaning they're going to have traditional retirement plan and they'll have a Roth component in that retirement plan. And being able to do both,
yes,
is ideal. So you get the benefits of both approaches, because that Roth is going to grow tax deferred, even though you put after-tax dollars in it, but you're going to take the income out, income tax-free at a later date. The pre-tax, you get the tax deduction. Now it grows tax deferred. You'll pay taxes on the income when you start drawing it out.
Right.
We try to encourage people to take advantage of both.
Both.
Of those. Yes.
Yeah.
So,
Yeah, that's awesome. And then I wanted to get your opinion on SCHD. Are you familiar with that ETF?
what is it again? I'm sorry.
SCHD. It's the
I'm
Charles Schwab.
ETF. I'm not specifically familiar with that one, but
Oh, okay, cool. Yeah. I like to ask people that as well. It's one of those ETFs that's like, it kind of plays it safe, but you still get pretty decent dividends off of it, as were a lot of people. So like, MicroStrategy, for example, is like, I can't decide if that guy's just like completely insane. He's the guy that just takes all of his business money and invests it into Bitcoin. So he's an acquisition company. And then there's all these people, there's this like really weird ETF company. I can't remember what they're called, but it's like, they have like Misty, like MSTY, where it's like you're doing like hedged bets on cryptocurrency. And yeah, like they offer these super high dividends, but it's like, that's very risky.
yeah.
So like, I understand wanting to try something out, but would you say probably, main kind of like bonds, dividend paying, and then have a smaller percentage for companies that you're like, this is going to be big. I believe I'm going to make money on this. Smaller, but then like a tiny little thing reserved to get that whatever, where you're like, maybe this will take off, maybe this won't. I just feel like, especially with like Robinhood and Acorn, like all Webull, all these kind of things coming out, it's like, now it's like, ooh, this is on the market now, and people don't have time to research. And then you start seeing where they're now, you're buying an ETF of a company that's literally just like doing shorts daily. Right. And then you could just like lose all your money, like really fast.
Yeah. I think I would say crawl before you walk.
Yeah.
Walk before you run.
Right.
If you're not in a position to experience a loss,
yes,
start systematically and slow. You can be putting $25, $50, $100 a month into purchasing in a mutual fund or ETF components, portfolios. And once you accumulate some wealth, maybe you take a piece of that and be more speculative with it.
Yeah.
But it's just like, I'm going to say it's just like gambling. If you can't afford to lose, you shouldn't be at the
exactly.
table.
Yeah. Yeah. That's, I try to get this through to people so much. They're like, dude, I'm like doing all in on crypto, bro. And I'm like, hold on a second. Let me explain something real quick. So yeah, right. Bitcoin, it's obviously like it's something that's sticking around, but and I do a small amount of crypto investing, but like a little bit. Because what happens, especially like these meme coins, is you get some celebrity, like the Hawk Tuah girl was a really good example. You get some celebrity they generate these coins, and they're telling people, oh, it's going to go to the moon, it's going to go to the moon, and then all these people just start taking out loans and buying these meme coins, and the people that started it pull the rug out from underneath it.
Right. Yeah.
And it's like, since it's new, it's not like they are now making laws, but at the time it's not technically illegal to do that to people.
Yeah.
So I'm like, if you're going to invest, man, like pay attention to like the history and don't be going all in on these meme coins and stuff like that. I mean, invest a little bit in Bitcoin just in case, if you want.
Yeah.
But do not go in there like this is Las Vegas.
Exactly.
It's not gambling. You can't gamble that way. So, I feel like raising awareness on stuff like that is going to be important, because I feel like, especially with AI, like the AIs are going to be able to generate all sorts of stuff like that. It's all just computer code. And everyone's like, oh, it's encrypted. And it's like, yeah, well, when we get supercomputing going, like, it's not safe. Don't send your money to randos on the internet,
Yeah. Yeah.
Well,
absolutely,
man, I really do appreciate your time.
Well, I appreciate the opportunity. If this has helped anyone, it's a good use of our time. So
absolutely,
man. Appreciate you doing it. So.
Yeah. Thank you so much. And is there anything else you want to include here at the end?
Just be intentional with your money.
Yeah.
Know where it goes.
Right.
That spending plan is important.
Right.
If you can, the whole name of the game is to have less outgo than you have income.
Right.
Manage credit very methodically and intentionally. Don't dig a hole you can't get out of.
Right.
And
100%.
You know, if someone wants to reach out with a question, you've got it on the podcast, my contact information, or
Yeah.
I'll be glad to talk to them. So.
Yeah, I'll put everything on there, and I'll also include your information like on the screen and everything like that, and provide links to everyone. Again, man, thank you so much for your time. It's really cool that
you're going well for you, Greg.
You're willing to do this. Yeah, a lot of work, but you know, it's fun. It's freeing, you know, when you're not having to rely on everyone else. You just kind of like, all right, you know, if I don't know something, I'm gonna have to research it.
Yeah,
you know?
Absolutely.
You can learn stuff on the internet now from very reliable people that you would have had to go to Yale back in the day. You know, I mean, it's like, it's free. Quit looking at butts all day and like just spend some time. Some time watching some good quality content. Are there any YouTube creators that you would recommend?
You know, I'm going to have to tell you that I'm probably not the resource to even answer that question.
Yeah.
So
I would love for you to check out Minority Mindset, though. Okay. I feel like that guy he's not inflammatory as much as a lot of people, but he offers a lot of really sage advice. His name's like Jaspreet Singh. I started watching his videos too, because I was just like, okay, now everyone's like, we're going to get rich today. And he's just like, no, hold on. We're not going to get rich today. But this is how we can get a plan. So, man, I appreciate it. And reach out to me if you ever want to do something like this again. I can get another round of questions and we can connect then.
Sounds great. Appreciate it.
Thanks, Alan. Have a good day.
Yep, you too.